Good morning, everyone. I'm going to be going over the data sets and earnings for the week of February the 10th of 2025 and getting right into it. Let's click that. All right. So we don't have anything for Monday, but we do have a TSM, our TSM's January, excuse me, January 2025 sales report that could be pretty decent on the market for tech and semiconductors, so just be aware of that. I'm not sure what time that gets released, so again, just be aware. Tuesday we have Powell at 10 a.m. He's testifying before the Joint Economic Committee. Um, the first part of the testimony is just going to be like the pre-written statement that he has, but the second part is going to be um, questions by the committee itself. So that's usually when the market gets fairly volatile. So just expect some decent moves between, when that's going on. And that starts at 10 a.m. I don't know how long that lasts. I don't know if it's an hour or 2 hours. So just be aware of that. Tuesday, there's the 3-year note at 1 p.m. The yields have been going up. So right now it's at 4.3% for the 3-year. I'm expecting that to move up a little bit. Wednesday, we have a really big day. That's when we have CPI at 8:30 a.m. Uh, I'm kind of expecting either the same as the previous reports or actually an uptick in the CPI just purely due to some of the data sets we've been seeing earlier this year, like the unemployment. We saw that actually tick downwards when many were expecting it to hold the same or tick upwards. So I feel like a lot of the market's not considering that the yields might be going up quite a bit more right now, and I'll talk about that another time. But just getting back into the data, after the CPI at 8:30, so we'll have tons of CPI data we'll go through at that time. But we also have the second day of Powell's testimony, which that's again before the Joint Economic Committee, and it's just going to be the day to uh, questions. So whatever wasn't asked on day one will be asked during day two session. We have the 10-year note auction, which again, we should be seeing that the yields increase on that. That comes out at 1 p.m. Thursday, fairly standard day. We just have the weekly jobless claims. Again, we're probably going to be expecting that to tick downward just a little bit, even though we saw that tick upward last week. Um, just some of the reports and everything should be pulling that upward because we're not going to be getting the federal job cuts just yet within our jobless claims or anything else. So for now, that should be still strong, but um, probably in another week or two, we should see that tick upward a little bit. We also have the core PPI on Thursday. I'm expecting it to stay the same or have a slight uptick. The consensus is actually expecting an uptick of 0.3%. So, um, that's already going to be bearish for the market just based off of that. If we don't meet that consensus, then um, that could also be bad for the market too. But likely, if we don't meet that consensus, that's going to be a bullish thing for the market. Again, just PPI. We have the 30-year bond auction, which it's almost at 5%. Very likely we're going to see that tick upward just because all the yields have been moving upward lately. There hasn't been really strong data to support pulling those down just quite yet. Friday, we have some decent data sets. We have the core retail sales, which that's moved the market pretty decently before. We have retail control and then just standard retail sales. Again, that can move the market, but just kind of depends on what they're expecting. They're expecting things to be a little bit slower this time, a little softer, but that could be, hit or miss. And the market likes to move when this is usually higher, so just be aware that. Now for earnings, let's go ahead and pull up earnings really quick. One moment. Okay, for earnings, I'm not looking at anything on Monday, but for pre-market on Tuesday, there's Shopify. Again, I'm not gonna really be playing any options off these earnings this week. Maybe Reddit, but other than that, I'm really not looking forward to any of these earnings. But I do want to go over the ones that I'm interested in. So again, Tuesday pre-market we have Shopify. Uh, After hours on Tuesday we have SMCI, and then Upstart Holdings. Upstart's pretty fun to play just because there can be some pretty decent moves for, the price. Wednesday we have Reddit earnings in the after hours. I know a lot of people are wanting to play that one, so just be aware the contract premiums are going to be really high because the IV percent's going to be extremely high on that. A lot of people are selling calls on that and doing really well. Thursday in the after hours, there's Coin, which I might play that one. I like playing Coin quite often. We also have Palo Alto, which that's a decent tech. I'm not playing it though. We have DraftKings, which that moves a decent amount. And then we have Applied Materials. I don't really play the options on this, but it does have a decent impact on the market, so just be aware of that. Friday, in the pre-market, we have Moderna. Again, I'm not really looking forward to anything on that. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. Alright, going over the SPY. And looking at the 4-hour chart, I just want you to look at the structure first before we actually get into like actual numbers and everything. Um, we have a nice double bottom forming here, and I don't have a specific drawing tool or else I would draw it out. So just follow my cursor with this one, but I am getting a tool for the computer so I can actually draw on the screen. But basically, we have the double bottom right here. So here is the first part. There's the second. It's basically a big W. So if this is a bullish structure, then this can break out pretty much at any time. But I know many of you are looking at this triple top right up here, which it is forming pretty bearish liquidity. I mean, we've seen it reject every single Friday straight down. And if this is going to reject, we should very likely see around the 587.23 mark. That would put us right within that line. And let me show you the channels. That would set us right within that selling channel. And just to quickly go over the channels so that you can follow along. Let's go to the daily. No, actually, let's go back to the 4-hour. So the orange channel is a micro buying channel. This channel's been holding weight pretty much since last November. It's basically like a major channel, but since we already have a larger major channel, it is the micro buying channel. Um, it's been very, very strong throughout this entire rally. It's only broken a couple times, which that means we've had to expand it. Now, this selling channel actually expands a little further. As you can see, there's a line right here. So from this support, and this support, we have this selling channel go down further. But for right now, it is holding support in that area. So unless this breaks down further, we have no need to expand the selling channel out. But for right now, it is holding this strong area within this 584 to 611 range, but it has been moving downward. This is basically building really strong liquidity to either break out upward or to break this major buying channel and head downward. We have a decent bullish structure going on right here throughout the daily chart, and I'm not going to show it on the daily, but it would look like an inverse head and shoulders. And here's the left shoulder, the head, the right shoulder. So if this is a bullish structure, there is a ton of liquidity to break out here that they can do. I'm not making an order. Okay, let's see. This has been within a major consolidation channel. I know that some people have commented about it saying, "Oh, is this just arbitrary channel?" No, it's because we've literally been within this range since November. Uh, Usually the consolidation channels aren't as large, but this range has just been massive, so we have to keep the channel that large for now. And then just going over the daily chart, let's take a look at our Moz and Bollinger. I want to hide the drawings. Now we have, let's see, we have the 5 mile right above us. Right now, the market overnight is at 602.30. It closed at 660.77, which means it's very likely going to open the 5 mile around 601.80-ish, give or take. Right now we have the 10 mile at 602.34. That's going to move very likely down a little bit. As you can see, it is starting to curve down slightly. Um, that's not exactly a good thing. We kind of want those moving averages moving up if we're expecting this to break outward, but this could still bounce. We have entered the short-term bearish range though, just because we have the 5 mile underneath the 10 mile. Um, so for the next few days, that's kind of what you're looking for. You're looking for the 5 mile to bounce between either the 20 mile or break above the 10 mile again. Um, With that said, we do have the 20 mile at the 598.83 area, which means that, with the market at 602 right now, we're only basically $4 away from that. That can easily happen, within the next couple days, and we have some big data sets that can definitely give us a nice 20 mile test. But if we do get that 20 mile test, that's a spot to set up straddles because from the 20 mile, and I'm going to just show this to you really quick. There's always a very large move from the 20 mile. So last time we hit the 20 mile, we got all the way up from, that 590 area to the 610. The time before that, we had a 20 mile test, it looks like, at the 596, and we pulled all the way down to 575. The time before, again, 598, and we pulled all the way down to 581. So, and that works with the upside too, right? Like, we have another one here at the 576, and again, pulled all the way to 598. So, always set up on the 20 miles. Um, Very good spot. But between the 5 mile and the 20 mile right now, we're just looking for where the 5 mile is gonna be taken. If we're gonna have some additional days of heavy selling, then we're gonna look down to see the 5 mile break underneath the 20 mile. But now that we've actually tested the 5 mile, and we're only $1 away from it right now in the overnight session. So, or actually less than that. So we could be testing the 5 mile right now if the market intends to buy upward. And just quickly going over some structures, because I know this video is already getting a little long. We do have this double bottom here, which is a bullish structure. Potentially, right? I mean, this could be bearish or bullish right now. We need more time. Um, right here could be a cup and handle forming, and this is a pretty decent cup. It has plenty of liquidity in it. We now have the handle forming, which on smaller time frame, we could see an inverse cup and handle form. So left shoulder there, the head, right shoulder, and pull upward and fill that back up, or we could see this cup fill out. So look for bullish structures there if we're expecting some sort of bounce. Again, this could pull all the way down to like the 20 mile, which is at that 598 level. And that would be perfectly within the bounds of having that inverse head and shoulders for the breakout. If we're looking for more of a bearish move though, I'm going to be looking for like a head and shoulders, inverse cup and handle. For example, right here, they could be forming an inverse cup, pull that upward and form a handle to push downward further. And again, on the bearish thesis, we have been selling every time we hit this top part. all the way down, which this one would be below the 20 mile if we do end up selling again here. So just keep that in mind. So just to quickly close this video out, going over the 30-minute chart. Um, Again, we're looking for continuation, whether it's bearish continuation or bullish continuation. If we're gonna get bullish continuation, kind of look downward. You know, where we want to look downward to see liquidity get pulled up, right? If we're wanting to go downward, we want to see upward to get pulled downward. I'll go over liquidity in another video, as I would actually like to go over like a ton of different stuff in videos from, you know, the courses and everything we've gone over in class. But for now, I'm gonna end the video here. Trade safe tomorrow, everybody, and let's have a really awesome week. It's a very busy week, so just stay on your toes and don't overcommit just because it's going to be very volatile, both up and down, with Powell speaking and just the data sets we have. There can be some really major moves. Um, we'll use the 5 mile quite a bit to set up strangles and straddles, and definitely use the 20 mile to set up strangles and straddles. So yeah, other than that, trade safe, have a good day. That's all.